Let's take a look at this SPXU and SPXU. You can see it's been in this downtrend. We had a little bullish engulf right here. Um, it tried to move up, held up pretty well on this red candle, and then the very next day it moved up over the T line. This created our pinball setup, and what we want to look for when this happens is that move up over the T line. The very next day it was just totally hammered and it started this pullback. But this pullback, if you take a look at this low and we came up over the T line, and now this high, we have a low, we have a high, it's pulled back below the T line, and then it's kind of moved up, a little bit of consolidation, and from there it's been up. So now we have a low, high, low, and it's been trading right near this T line level, pretty consistent the last week or so. And you can see how the T line has been down, and price action has caused the T line to move up and start flattening out. And if you take a look at it here, I'm going to bring over another chart, kind of cleans it up a little bit. This is the T line with the 2 exponential moving average. You can see that I bought some SPXU today. It was on our recommended list on the 24th, and it's in that area that I think it can be bought. So I did buy some this morning. And just using the T line here, let me get rid of this line in there. There we go. You can see the T line to the downside, and now you can see the T line starting to flat out. You see the bullish engulf here. You see the rally up over the T line, and then the consolidation in that T line area. Well, price action, here we are back up. The 2, there's the green line, that's the 2 exponential moving average. And putting these two together, it really does give you a good view of what the chart is doing on a short-term basis. And this is not just for short-term traders. It can be for long-term traders looking for good entries. It takes a short-term movement to get you excited about it. If a chart's moving down, 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 you're waiting for it to get long. Well, what you're going to do is you're going to wait for something to tell you that. Maybe it's just hammering support. Maybe it's putting in a multi-bar bottom. Maybe it gives us a big bullish reversal candle with follow through. And if you do use the candlesticks, that's where this really starts working. Is when you see that bullish reversal start moving up, what'll happen is the price action and the 2 exponential will move up over the T line. And you can see how that's starting to work right here. So for a moment, and I know a lot of people really don't like to trade SPXU, don't like to trade the inverse or anything. But for a moment, let's not look at what it is. Let's just look at the chart. So here we have this downtrend, very evident here. Now we see it starting to flatten out, and actually it's starting to curl up to the upside. Now price action, we gap up, we move down, we move up, kind of moving flat right in here. You can see before it can make any real money, we need to take out these green dots right here, basically this top right in here. But the trend is your friend. It truly is. The thing about it is, so many times people don't know what the trend is. They don't have a definition for the trend, or they don't have a definition for a trend. And you can have multiple trend definitions. For instance, are you looking at something longer term? Are you looking at something shorter term? And then everything in between. Looking at the T line is just simply a shorter trend. It's a way to look at what the trend is doing, what price action is doing in a shorter trend. So here we are moving up. The 2 is above the T line, and that's old stuff there. Making one moving average above or below a second moving average to give you that trend. That's as old as the stock market is old, and there's nothing new about that at all. It just putting 2 moving averages together and then learning how to use them is what it is. But when we're in a trend, that's where we start looking at candlestick signals on intraday charts, daily charts, maybe weekly charts, somewhere to start looking for that entry. And I happen to think this particular chart is setting up pretty nice off the bottom. Now, if it doesn't work out, we're gonna see that. We're going to see something like this here. Maybe not a beautiful red bearish engulf like this, and maybe not an absolute confirmation the next day to the downside. And by the way, you can see how the T line or the 2 EMA popped right below the T line. That told you that you want to have some caution there. Maybe you don't want to be long this, and then here it comes right back up, so you do. Well, that's what you're going to see here. You're going to see price action move back and forth, but what is the short-term trend doing? The short-term trend is still to the long side, and this is for the folks that like trading off the bottom. I mean, it's definitely a bottom trade, bottom fishing, some may call it. And if we see this breakout, if this happens to break out right in here, then we're probably going to see something toward the 46. 46 is what I'm looking for. If it starts to break out, of course it can fall anytime in here, but that's what I would look for a target up in this area. Maybe a little hesitation here and there. But right now, right now I look at this and I see, okay, my risk reward. My risk is, well, first I have to like the chart. I look at the chart, I see that it's up above the T line. The 2 is above the T line. Price actions above the T line. We have a morning star type signal right here. All of a sudden I'm thinking, why not be in this? This just looks like it's ready to do something here. So with that, I want to look at my risk reward. Well, my risk is a close below the T line. Well, that's pretty small risk compared to the reward that we're looking at. So I move over here, and what did I say, 46ish. So we'll put the reward up into this area right here. So pretty small risk, pretty good reward, and the chart is starting to work out on that shorter time frame. And if it fails here, like I say, I have my stop set, so I'm pretty comfortable about it. I'm real happy with this trade. Just let it kind of work itself out right now, and looking for that breakout. But it's just using that T line right there and the 2 EMA that kind of points out what the price action is doing. It puts you in that trend, something that you can say that's tradable, and I think that's a very positive way to trade right there. Here's the SPY, just using the T line and the 2 EMA, and I've got Andrew's pitchfork lined up on this as well. But you can see how we're trading underneath the T line. And what I do there, I always look. When I look at price action and the T line, what I want to ask myself is, what is price action doing in relationship to the T line? Keep in mind the T line is a short-term trend indicator, and then the 2 EMA just follows what that price action does. It kind of straightens it out, if you will. If you look at this here, yes, Friday, there might have been a lot of bullishness Friday when we had that gap up, but we needed to close above the T line, and the 2 needed to be above the T line. If we closed above the T line and the 2 EMA did not, then what we need to see is some absolute confirmation the next day, which is today. Well, as you can see, we didn't get that confirmation at all. But if you just looked at the absolute price action, and if you had just an inclination of bullishness in your market analysis, you probably would have jumped in Friday, and then today you would have been just a little bit disappointed. Where if you just take a look at what the trend is doing, the trend has been down, and it was down Friday. It was down Thursday, it was down Friday, and it's down today. If you're trading this as a chart, there's just no earthly reason to be long with this if you're following the short-term trend. Of course, if you're an aggressive trader, you may be looking at it right now, but the end result is you want it to move up, which we're going to pull the 2 above the T line if that's if that's what you want, that's what needs to happen. So, and you can see how we're kind of topping out right here, and we're kind of fighting this. Well, it appears to me that the bears have a little bit of control for the short term. Obviously, for the longer term, I think the bulls have some control, but for the shorter term, the bears have some control here. So, just a terrific way to say what's the short-term trend doing, and it'll keep you out of so much hot water, and it'll get you in so much green water, and that's where we want to be. We want to be in that water that pays us the green dollar bills, and the trend is one of those. Trend is so very powerful. The trick is to designate what is your trend, and then make sure you trade your trend. And the T line has worked out so well for me. Let's see. So you use the 2 EMA on the daily? I do, and you don't see it on the normal chart, because if I put it on the normal chart, it just makes your eyes go dizzy at the end of the day. But I have this chart right here setting to the side, and I can always see it and see what that short-term trend is doing. For instance, in this chart here, there's no way I could say, well, let's be long this. The 2 EMA is trading below the T line. That indicates a downtrend, and there is no reversal signal here. So if the 2 is below the T line, I need to see that reversal signal here. And we just don't have that right now. So until that happens, I'm going to have to stay very cautious on the longs, and what longs I am in. When if they pop, I want to trade into strength right there. So anyway, that's just a little bit on the T line. Just a little bit on the T line on how I might use it, and for instance, how I am using it on this SPXU right here. So anyway, thanks. And this will be on YouTube, and I'm gonna post it out here in a moment. And if you missed it, you'll be able to get all this on that YouTube. All right. Okay. Thanks.